I'm 680 News Senior Business Editor Mike Eppel. Air Canada has some competition in its bid to buy Montreal-based Transat AT, the operator of Air Transat, the biggest independent real estate developer in Quebec. Groupe Mach Inc. announced today it has an offer on the table for Transat, priced at over $600 million. Over $1 billion if you include assumed debt. It's a higher bid per share than the previously announced tentative deal between Transat and Air Canada. Air Canada offering $13 per share, Groupe Mach offering $14 per share. They say they will need some assistance from the Quebec government to get a deal done, but the Air Canada Transat tie-up had faced some internal resistance from shareholders and some politicians in Quebec. It would be a made-in-Quebec solution again and keep Transat headquarters in Montreal, take the company private, and Groupe Mach says it would allow Transat to continue on its 5-year growth plan, specifically related to the development of tourism properties worldwide. Air Canada, meantime, signing a partnership deal with Drone Delivery Canada. This would see Air Canada Cargo team up with Vaughan, Ontario-based Drone Delivery for delivery of parcels, larger-sized objects to potentially remote locations in Canada and elsewhere. This deal had drone delivery stock on Bay Street today up by as much as 13%. Is the next move for borrowing costs lower? We saw Australia's central bank today cut interest rates for the first time in 3 years. They cited the issues related to global trade tensions and slowing signs from China's economy. We also heard from the head of the U.S. Central Bank, Jerome Powell, in a speech in Chicago, talking about potentially cutting interest rates in the U.S. if trade tensions escalate. All of that talk about interest rate reductions, and nothing at the Bank of Canada specifically, but it is underpinning the stock markets. Wall Street had quite the rally today. The Dow was up sharply during the session. Investors giving Facebook a thumbs down these days on regulatory risk. The company facing potentially multi-billion-dollar fines from the U.S. Federal Trade Commission and antitrust allegations in U.S. court related to its dominance on social media. All of the big companies in tech right now, whether it's Facebook or Amazon or Google or Apple, facing increased scrutiny by regulators. Facebook shares down over the past 5 days by 13% on Wall Street, wiping out $50 billion in market value. And less bling in the bottom line for Tiffany & Company. The luxury jewelry company saying today that its earnings were lower than a year ago as sales slumped, and they're seeing what they're calling a dramatically lower tourist spending in the U.S. among Chinese consumers. And they're warning on profits, but the stock was up today as Tiffany is showing a sparkling dividend, raising that to investors. Share price up on the day. From the 680 newsroom, I'm Mike Eppel for City News.